Happy Friday, traders. It's 8:01 a.m. Chicago time on the 5th of June, 2020. It's non-farm payroll day. This is episode number 1770. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on for sure as the markets get blown up by the non-farm payrolls, which came in quite strong in case you haven't heard. There's the unemployment rate for May was found to be, well, is being reported, I should say, at 13.3% versus 19% expected. The overall market reaction has been very, very strong, very positive. Hourly earnings are down 1%, estimated down 1%. So overall, the markets responded with a pop higher. The market's been rallying. We're seeing probably one of the biggest rallies of all time, um, given the duration. But non-farm payrolls for May came in at 2.509 million versus negative 8 million expected. So that's a swing of plus 10.5 million. The prior is down a loss of 20.537 million. I believe the United States reached a job loss figure of somewhere around 48 million jobs over the last 3 months or so, and or 2 months. And in May shows a bit of a recovery. The market's responding very positively, and of course, this is going to be highlighted by many. But it's this is where we stand. POTUS is scheduled to hold a press conference at 10 a.m. Eastern. Of course, the job numbers are great in an election year after a disaster here in the last couple months. So this is expected. So look out for those comments. Also look for comments from Powell and others relating to this. The SOC, the scene of the crime, or the point at which the number was released, is 3133.75. 3133.75 is the SOC for the non-farm payrolls. Currently, the S&P is trading 3165. I mean, we've ripped through the 3100. We've taken out the 3150. We had a beautiful pullback. I'll show you that on the on bookmap in a minute. Beautiful book pullback to 3150, where a collision had taken place before and bids came in, and now it's continuing, and it's up. We're about 15 points above. Heavy liquidity here at 3165, or relatively heavy liquidity at 3165 before we took it out just now. So quite a pretty orderly trade in my opinion currently. Looking at the calendar, not sure why my browsers are so slow. Looking at the calendar for the rest of the day, we do get a number out of Canada, the IVPMI for May at 10 Eastern, but overall, it's not, we don't have much on deck. The OPEC meeting potentially. OPEC meeting for today as well, but I'm not sure where that stands, the OPEC or OPEC plus meeting. So there's not much left on the calendar for today in terms of high impact figures. Let's take a look at what was expected yesterday just in our review segment. I want to try to keep this as quick as possible. Yesterday, the primary expectation, which actually started launching itself by the end of the trader bite, and I showed you the footprint as it was happening. The expectation is we would likely push to around 31.17 to 31.19, and then find sellers in this area get below the prior day's low. The key element of yesterday is that we are likely to break the one-time framing higher with by breaking the low, and to start filling at least the gap mid. Here's the gap mid right here. this area right here, and which was 3190-ish, I believe. I forget what it was. I'll show you that in a minute. And then I was looking for a bounce into the close of the day. Potentially, here's what actually happened. We end up opening in an open auction. Get rid of some of this noise. We end up opening in an open auction, and then we break higher as expected. We push through that 17 to 19 area to 20, a small pullback, and then we squeeze into 26.75. This was a tough trade right here. And then we finally turn over and we take out the IB high. We finally turn over. Small pullback to the mid, very difficult to trade as well. And then we finally break lower and we take out the overnight low. So we end up with a lower high and a lower low. So the one time framing up had ended as expected with a run up on the close. So this push to 26 really pushed about 10 points farther than expected. And frankly, I found it difficult to find those short spots. But you know, and then it resolves itself in an impulse, a quick impulse down when it does. And so the overall picture of yesterday was a neutral day, another neutral day, and it's a neutral normal day that closed right on the point of control and right on top of the high volume node in the middle of the day, with a low volume node at the key low volume node at 3106 and 3115. So you know, those who are trading the extended hours need to see which side of these breaks, and to look to go in that direction. In that case, the overnight session showed that the 3106 held. The overnight low is 3105.50, and then it squeezed to the upside. And then with the non-farm payrolls number, we are way up here um, at 3173 at this point. We're way above the prior balance range, the 2 days of range that we've had. And so this is where we stand. Here we are in a big picture. This is my composite. Each one of these bars um, represents the RTH session, and we can see that we have, you know, the big picture is we dropped to 3179.50 from 3382.50. We have pulled back to the mid. We've kind of messed around in what's called the golden ratio here, the mid to the 62% pullback. We messed around here for a bit, and then we broke out. And in that area, the 62% also had the MC point of control of this region. And now we're pushing through and squeezing through this low volume node, this composite and micro composite low volume node, on our way to the upper distribution from 3210 and up. We're approaching 3200. The market is pretty much fully discounting COVID at this point and the whole mess that was created over the last 3 months, 4 months really. So that's where that stands. I mean, this is a terrible environment for shorts. I had warned some as we were breaking out early last week, to say, man, this is not a good environment. Once we popped higher here, this is not a good environment for shorts. Once we pop higher after this test of 62%, it's just going to go badly for shorts as they fuel, and these are the words I used, as they fuel the move up by continuously shorting the market. So that's where we stand. The overnight session, here it is. We open up, we test down to 3106.50. Hang on, 3106.50. Okay. And then we squeeze right up. We push right through the prior day's high and The day before that as well, Wednesday's high after the gap up. We still have a gap below us. Nice pullback to VWAP here. Couldn't quite make it to mid. And then we have non-farm payrolls squeezing us higher. Already the market had a short squeeze type of profile in that it had most of the distribution on the upper portion of the profile before we even started to break higher on non-farm payrolls. It's just again, it's just looking bad for shorts. This is not the kind of environment that shorts can thrive in, and you know you could see that early on. Let me see what this scene pulls up. One second. Okay, so let's take a look at the order flow here. Here's the non-farm payrolls release right here, 33.75, right down here. And what we did is we pushed, and remember this is the 50, this is the mid-century figure. The 50 had really good offers on it, and they got lifted. You could see that the delta was very, very positive. The bars at the bottom reflect delta, not volume, not buy or sell volume, just delta. And you could see it breaking through, pulling back, and then pushing out to the next key um, key liquidity zone at 65. It does hit a minor zone here. And then what does it do? It methodically pulls back to where the same area the collision happened. And this is how order flow works beautifully, is that those who are trapped become bidders to get out, and they create this support. So as we see this the market moving down, as the market moves down, we're seeing liquidity increase over time and at a significant area, and this sets up a scalp long, a pretty solid scalp long. And so we pulled back to 31.50 and we push right into that liquidity at 65 and defeat it, move into the 68 and defeat that. The expectation here is it's likely to pull back to 65, consolidate here for another attempt and potentially correct after that. But the order flow is very, very clear in this situation here. We do have more participation, more offers up top, 31.80 to 82, and then above there, you know, we get into the 3200, the 3200, 3195, 3200 key option prices there. And below us, you know, we still have 3150 as a bid, and then the rest of it is quite dark matter there, and there's nothing going on there on a relative basis. And so the order flow shows that buyers are just not backing off. You can see the CVD is quite high, and so the overall volume is quite high, and that's where we stand. So with that, knowing this, let's take a look at what's expected for today. But again, I want to remind everyone that this coming Tuesday, June 9th at 4:30 Eastern, we're hosting the Small Exchange. The Small Exchange launched on Monday this week, and we have their team on a panel discussion. They'll present. They'll have about a 20-minute presentation, and then we have about 25 minutes of Q&A. And this gives online traders a platform to ask questions directly. I will be moderating this. Please sign up. It's my edge, typed myed.ge/small exchange event with initial caps. The link is in the description for the YouTube video you're watching currently for the Trader Bite, and the link is also in the live chat. I'm going to pop that in right now. Here it is. Please sign up. And let's move on to what's expected for today. Also, a reminder that today is Like Friday. Take a moment before you leave today and hit the like button. it helps other folks find the channel. So here's where we are. Huge gap. With markets completely out of balance, clearly out of balance. And the expectation, and we're pushing highs, the expectation here is that there's high incentive for both the long-term shorts or long-term shorts, long-term longs, midterm participants, intermediate time frame participants, long and short, and day time frame participants, long and short, to participate. So this morning, the open is expected to have high volume, and we're expecting to have pretty good market on open orders coming in. I'm expecting it to really squeeze on the open. I'm looking for a squeeze immediately right into the 31.95 area where that size is. And I'm expecting it to falter here in these stock zones until it turns back and clears the deck a little bit. Not expecting it below 31.50 before it consolidates, and we're likely to see a typical summer non-farm payroll where we do a test one way, we do a test the other way, and then finish somewhere in the middle sideways as people leave early. So that's the primary expectation. The secondary is an open auction that squeezes up, gets responsive, moves down, and then impulses up and then continues to squeeze higher into the 3200 area. 3200 is not far, it's well within reach. There are scenarios 3 and 4 that are likely today: an open test drive down as those who come in find that the market's much higher, may be tempted to take something off the table. So we have a small spurt down, small test down, drive up, consolidate, and then squeeze higher, and then just go sideways for the rest of the session. That is very likely as well. And then there are participants that are likely to come in and drive the market even farther. The problem with driving the market even higher, in other words, initiative buying, um, the problem here is that we have relatively weak structure below. We have several gaps. We have a lot of poorly traded areas below in the form of non-balance, in the form of kind of serrated profiles like yesterday's, and a lot of low volume node areas that were not retested. So I'm not certain how strong the push higher is going to be, but this non-farm payroll release certainly helps these guys push a long way. So that's where we stand. I'll leave you with that. It's hard to predict what today looks like. We just know the market's out of balance. Just remember, the market's out of balance. This is the kind of day where you want to go with the direction of whichever side is stronger. So if the market is responsive, as in scenario one, you want to trade from that side. Give yourself time. The first 15 minutes or so are going to be kind of wishy-washy. Give yourself time, and then our job today is to try to identify which side has the intent to continue directionally, and that's the side we're trading from. The way we trade that side is to look for pullbacks to zippers, pullbacks to stock zone structures. What we don't want to do is miss the rally, for example, and then just try to sell because we missed the rally. No better reason than that. So just, keep your hands in your pockets if you don't see things cleanly enough to put on a trade that has a plan with defined risk. Good luck, and don't forget to sign up for the event on Tuesday. Take care.